Friday, August 29th, 2025, Monaco 64, home of alternative economics and contrarian views. Good morning, Clive.
Good morning, Mario. Another day, another record on Wall Street last night.
Yeah, and I saw China, Shanghai made another record high as well. The Shanghai composite is like up 8%. So it doesn't seem like all the tariffs are impacting China that much either.
Well, it's just this wall of money looking for a home. People have got this fiat cash. They want to park it somewhere. You've got all the foreigners all around the world saying, "What can I do with my cash? It's not what it was." So they're moving into equities and pushing the Wall Street higher. Then we've got the government who's running a deficit. So far this year, this financial year, it's been they've spent 1.6 trillion more than they have collected in taxes. So someone's getting that money and they're deploying it obviously into equities in some way, shape or form. And lastly, we've got this massive increase in the money supply, M2, which you spotted the other day, which is up, I think it's up a trillion in the current year.
Yeah, and yeah, people are going to the stock market, but the smart money, if you want to call it, the central banks, they've been loading up on gold, especially since 2022, over 1,000 tons a year. This year, I think the first half, they bought like 410 tons, so it slowed down a bit. But prior to 2022, the average for the previous decade was only about 400, 500 tons a year. And Clive, I've got some really interesting news here, especially for us who have been telling people that they need to have their own like central bank and accumulate gold because we're going to continue, as you said, seeing government spending, inflation, deficit spending. But for the first time since 1996, we're kind of back on a de facto gold standard. And people might say, what are you talking about? Well, according to data here, and not Rafi, but Tavi Costa, who I've had on the channel several times, he pointed out yesterday, foreign central banks now officially hold more gold than U.S. Treasuries for the first time since 1996. Let that sink in. If you think this buying streak is ending, just look at what happened in the 1970s. This is likely the beginning of one of the most significant global rebalancings we have experienced in recent history. So there you go. And the data comes from Bloomberg, and I think he must get this from World Gold Council and stuff like that. And Clive, some people might argue, well, and you said that as well before we started out, it's because the gold price is going up. Yeah, and I agree. And maybe also because government bond prices or treasury prices are going down. But be as it may, you can't really measure treasuries in metric tons. So you got to measure it somehow. And I would argue that if you look here, it started to pick up these holdings also when central banks started buying massively, net buying since 2022. Yeah, I think this is going to continue, and I'll let you chime in, and then I want to also cover something else about this. But go ahead, Clive. What do you think?
Well, it's certainly a fact that central banks have been net buyers and continue to be net buyers. The one I tend to watch is China, although they weren't actually the biggest net buyer of gold. But what's quite interesting, when I looked at the Chinese numbers, because I've broken them down, I see that month after month, their holdings of treasuries do not rise, but their holdings of gold, in terms of absolute number of ounces, does rise. So they're buying ounces every month. They're not buying treasuries, which are fairly steady. And the percentage exposure they've got in 2 or 3 years to gold has gone from something like 3% to 6% of their reserves. Maybe it's getting on for 7 now. So they basically doubled their exposure to gold in partly because of the price rise, but partly because they've been buying every month. I think that's a trend that's going to continue. There's a reluctance to increase their holdings of treasuries. And I think around the world, central banks are wondering whether they should continue to hold these treasuries. But on the other hand, they're kind of nervous of what would happen if we dump them. Is this going to be seen as an act of war against America? And are they going to suddenly impose massive tariffs on us because we decided to unload our treasuries? We're here in Switzerland now. I don't know if you saw the comment by Trump, but basically he's demanding that Switzerland pay him a huge I'm going to say not pay, maybe not pay him, but basically pay a bribe to get the tariffs down. And the comment he's making is Switzerland's got 600 billion of US securities. Well, you know, we're obviously on the one hand, that could be used as a bribe to get the tariffs down, but I don't think the Swiss are going to do that. But on the other hand, there must be a certain reluctance to carry on holding US securities, including treasuries. But does anybody dare to get rid of them? Would that be seen as an act of war or retaliation?
So Trump wants Switzerland to pay the U.S. how much and with
Oh,
what?
this is doing the rounds in Europe. One of the German newspapers has basically got their hands on the phone call between Trump and the Prime Minister of Switzerland, and the gist of it is basically he wants Switzerland to make a gesture, a monetary gesture towards the United States to get the tariffs down, which is not going to happen, by the way.
No,
It's just
no. Clive, there are people, of course, who argue as well that treasuries have been in a bear market. And that's another reason why there's more gold holdings. But I had a look at Clive, and I used ChatGPT because it's quicker. But you still have to ask the right question, of course, and know what you're talking about. I asked them what the average maturity of foreign holdings of U.S. Treasury, central bank foreign holdings of U.S. Treasury was, and they told me it was 6 years. So I took the 5-year note future, which is pretty close in maturity, and this is the price. So hold on, let me get rid of this. So since September 2022, it's basically been flat if you look at it. Yeah, it's not because the price of treasuries have gone down, even though for different countries they might have different maturities and they might hold more, but it would take too long. I could do the Chinese holdings, Japanese holdings, but what I'm trying to say, treasuries have been pretty steady in the last 3 years or so, especially this middle of the curve here, intermediate maturities. But the other thing, Clive, and I think it's quite historic, and I think the era of holding dollars as reserves is quickly waning. I mean, I don't mean to say people won't have some dollars as reserves, but the major reserve currency or asset is going to be gold. And it has always been, Clive, because the last 40, 50 years has been an aberration. But I've got here a chart of the long bond, the T-bond future, which is more a maturity of around 20 to 30 years. And the price of gold in long bonds is near all-time highs. And I think that's going to continue as well.
Yep. Well, I think if you're holding a long bond, you're not going to get repaid in anything which will buy you much. And you might get repaid in US dollars, but what will they buy you in 30 years' time? Not much, I reckon.
Yeah, and Clive, the another thing that I wanted to cover today, I'm going to bring it up here. There's a lot of stuff going on, and it's to do with BRICS. And I'm going to share an article here, and it's from Bloomberg. Actually, it's not like a alternative or anything. It says, "Secret Xi letter revived India ties after Trump tariff barrage." So, I mean, if people don't know, China and India have been kind of not on good terms for a very long time because of territorial disputes. They haven't really been that friendly, but they are part of BRICS. And but now by pushing for this tariff war, Trump is actually uniting old foes, and I think that's going to continue, and it's going to be accelerate this holdings of gold versus dollars even more. So, what's your view on that, Clive?
Well, I think the whole world is wondering what their plan B is because suddenly investing in U.S. Treasuries, investing in the and dealing with the U.S. government is becoming more and more unpredictable, and countries around the world need certainty and they need allies. And if you can't be sure where you stand from one day to the next, what are you going to do? You're going to team up with anybody who'll be your friend. You know, it's like kids at school. One day they've got their best friend, and suddenly their best friend is behaving like a jerk, and you say, "Well, God, you start looking around for someone else to play with."
Yeah, and Clive, there's also news. I don't know, you've probably seen it about Vietnam. In Vietnam, when you think of Vietnam, you think of the Vietnam War, but Vietnam has come a long way now. And looking here on Wikipedia, it's got like the 15th, or hold on, GDP. It's got the 23rd biggest economy in the world. And this is what we saw yesterday. They announced that they're going to liberalize the gold market. So, Vince Lancy, who I've had on here as well, I'm going to share it with you in a minute, he said Vietnam ends gold monopoly, opening the market, narrowing the gap. Did Vietnam just join the BRICS? It's very possible, and I think I don't think there will be. It will, if ever there's going to be a single currency for BRICS, it's doubtful for me. It would take a very long time. But what there will be, Clive, is a neutral monetary asset that all the BRICS countries are going to use, and I think it's going to be gold. So I don't know if you saw this. I think this is
No, I
yeah,
hadn't seen that, but yeah, I mean, I think the direction of travel is clearly we're going to go to a gold standard in some way, shape, or form. It's just a
yeah,
question of how it will look when it finally comes.
yeah. Clive, the other thing I wanted to cover because I'm in the UK, a lot of my viewers are in the UK, is this here, and I did a little. I asked Grok to make a Rachel Reeves as a vampire, and we have even the CEO of one of the biggest supermarket chains in the UK, Asda. He's fed up. He's saying, "Stop taxing everything." So it's crazy. And I wanted to have your take as well on what's happening in France because a lot of people of late, thought that the UK would be the first government to fall in terms of the debt and calling in the IMF. But now even the French are supposed to be in trouble.
All I can say is that the French has got a problem with their socialism. It's coming in. There's a lot of demonstrations. It's become very hard in France to fire people. So it doesn't surprise me that their debt is going up higher and higher. But I've got nothing special to say on France. I haven't really been studying it recently, Mario. Have you seen something special that's happening this week?
Not really. It's just that here we've heard that the French finance minister he warned that they could have a crisis and might have to call in the IMF. But what I've heard from Alex Krainer, who I've had on the channel, is that those funds that they froze from Russia in 2022. Apparently, France has used billions of euros of that fund that people don't know where it went. And now with the situation and the war in Ukraine going really badly for Ukraine, if Ukraine were to lose the war, you could see France be on the hook for like 50 billion euros. But yeah, like you said, the people always expect something from government, especially in France. I think France is the only country that has buck the trend. And what trend? Well, they've lowered retirement age in the recent years, while other countries are lifting their retirement age, and that's becoming a drag on the fiscal side. But anyway, let's move on to something that you've seen, Clive. Maybe you want to something that you think.
Silver.
Oh yeah,
So I don't know how many people have seen this, but the United States has declared that silver is now a strategic mineral. This came out in an announcement on the 25th of August in the form of a draft paper. And it basically, I'm just trying to see if I can have a look at that. But basically, I can't lay. Here we are.
can
It's
you
the
want me to
Department of
allow
the.
you to share it or?
Yep, I can share it now. It's Department of the
Yeah,
Interior. Let's just go here, share.
and they added I think platinum to it too.
Yeah, let me see. I think that's the one. Share.
Yeah, I'm glad you mentioned that because I saw that too, but I forgot to mention.
I think, are you on the right page now? Can
Yeah,
you see
yeah,
it,
you can
Mariam?
see it. Yeah, yeah,
So it says Department of the Interior releases draft 2025 list of critical minerals. And they've added potash, silicon, copper, and silver, and rhenium and lead. These are new ones, and they removed arsenic. I don't know why they removed arsenic, but anyway, they have. Now, putting silver down as a strategic mineral means that they have to build a strategic stockpile. The United States, I'll just stop sharing that. Anyone who wants to look at this article in full can go to the Department of the Interior and look up the
yeah, yeah,
release, but I'll stop sharing that. So it means they'll have to build a stockpile. There's no point in having something as a strategic mineral unless you have a stockpile of it. Now, the United States used to have a stockpile back in the 1950s and 60s of silver, and they sold it all off in the early 1980s. So, as far as I can tell from searching around on Google and other things, there's no strategic stockpile of silver at all in the United States. And
yeah,
part of that stockpile was previously owned by the military because silver had a military use as well, has a military use.
yeah,
Anyway, they've got rid of it. The amount they used to own was two, 2 billion, roughly over 2 billion ounces of silver.
yeah.
That's what they used to have in their stockpile, which is a bit more than 2 years mining supply.
Yeah, and I've
So
got this chart up here, Clive. Someone posted this the other day, and I took a screenshot. This is the supply deficit
I just get the
since
chart back here.
2020. Can you see it?
Yeah, I could. It jumped to behind me for some reason. I don't know.
Oh,
I've got it
okay.
now. Yeah, so we've got the deficit of demand exceeding supply. That's the large increase in demand. I don't know why they've got this spike up because I don't see that spike on the numbers I was looking at. But the increase in demand is coming mainly from electronics. And of course, electronics are very important to the United States because of the big electronics industry and defense. So if they rebuild this stockpile, I guess they'll build it slowly, but they won't start buying until this draft paper has finished its consultation period. So the consultation period on the draft strategic minerals lasts until the 25th of September. And it's possible that after that date, they will start to build their stockpile, but they can't build it that quickly because 2 billion ounces is like 2 years' supply of silver. And, all of that silver's needed for the electronics industry anyway.
Clive, and it's interesting because you said they stopped their stockpile was gone by the 1980s, and you might wonder because silver is still really important for the military. Why it wasn't a critical mineral before? I think it's because the U.S. could, with the dollar, buy commodities from anyone, anywhere around the world. And the world is changing now. So, and the dollar, as we've seen, is not the major reserve currency that it used to be, and it's going to become less and less used. So, yeah, it's not surprising. Not just the
So
US are going after critical minerals. The world's going to become less and less globalized. I think that's what we're
So,
learning here.
so you're right about the military use because back in I think it was the 60s, the US handed over part of their silver stockpile, not all of it. They handed part of it to the what's called the US National Defense Stockpile, which allegedly holds 0 ounces of silver now, but they handed over. Presumably, all that silver has been used in making weapons since then. But from what I can read, that stockpile is completely depleted. So they'd have to buy, if they got back to their old levels, 2.1 billion ounces of silver. We're mining about 900 million ounces of silver a year. That figure is actually down to 800 and something million now because the amount of silver coming out of the ground is less and the demand, as you can see, is going up. Now, one of the things which is quite interesting, if you look at the Silver Institute, where they say that silver's going, they're estimating that in the current year, 200 million ounces of silver will go into private holdings of bars and coins, 200 million ounces. If you do the maths on that, it means that on the entire planet, that's only 1 ounce coin per 45 people. So basically, it's telling us that if their numbers are right, that 200 million ounces get sold to the public in the form of coins or bars, it's telling us that literally nobody in the world is interested in silver. Or,
For
if
now.
everybody had, if everybody bought,
Yeah.
everyone who was a buyer bought a coin and only bought one coin instead of a stockpile of 10 or 100 as people do. And I've had people writing me saying they've been buying monster boxes, which I think are 500 coins or 5,000 coins. I don't know how they're really big things.
I think it's
But
500 ounces, the monster
yeah.
box. Yeah.
So, imagine if everybody who was a buyer of silver bought 1 ounce, there'd only be 1 in 45 people who'd get that at that level. Can you
Yeah.
imagine if that doubles to 1 in 20 or something like
Yeah.
that?
The what was I going to say as well, Clive? We saw, and this is not something I agree with, but I guess what Trump and the U.S. administration, what they're thinking is that if we're going to compete with China and other countries, we got to kind of join them a little bit. So we saw recently the U.S. took a 10% stake in Intel. And why wouldn't maybe the US take a stake in silver miners or gold miners for that matter? I think, yeah, the silver sector, the gold sector, but especially silver is has a lot of potential. Not just buying bullion, but the buying the companies that mine silver. Maybe you could talk about the fact that there are not too many primary silver producers out there, right?
That's right. I'm in the middle. In the middle. I'm 95% done on a study of all the silver miners. I've been working on this for many weeks, Mario, because I'm bringing a video out in hopefully the coming days, maybe even today. I don't know. It's a difficult one to do because it's very difficult to research each miner individually, and you can't use AI because AI is all over. You can ask 8 AIs and they'll give you 8 different answers, so you've got to do it manually. But the amount of silver miners, it's something like 200 billion out there. The amount of gold miners is something like 600 billion. So collectively, it's less than a trillion. And if you think about it, some of these biggest companies in America, like Nvidia, Microsoft, Apple, they're all worth 3 or 4 trillion each. So any one of these companies could buy the entire precious metal sector, mining sector, several times over if they were to turn into cash and buy the sector, and you could buy it at the current price. So these sectors, the mining sector is very, very small. But if you look at what happened in the last month of August, I haven't got it for the mining sector, but I've got the basic materials sector, which includes mining companies generally. That was the best performing sector in the month of August so far, this 30 days, 1 month performance. That basic materials sector was up 8.32. I'm looking at it on my screen now. Maybe I'll
Yeah.
just share that with you, Barry, just to
Yeah, go ahead.
show that to you.
Is there an ETF for that or?
Uh, well, probably I haven't looked into that.
Oh, but you've got like the oh,
So
okay.
if you look here at the 1 month
Oh
performance, it
yeah.
says basic materials up 8.3, communications,
Yeah.
and then you've got all the other things. Technology is where's technology?
And
Technology
then
is what,
yeah,
1.39.
1.39. Yeah.
So what we're seeing is a shift of money into things other than technology. Technology is no longer the outstanding sector, even though it seems to be doing so well. In the month of August, at least, we're starting to see a drift. So technology, if you look below, 3 month cohort, technology has been the real outstanding at 15% more. Basic materials are up 12. But that has now shifted. People are moving into basic materials, which includes gold and silver mining
Yeah.
sector, which we know has done better than 8%, I
What
think, in the
about
month.
year to date, Clive? Can you bring that up?
Yeah. So year to date, basic materials up
Yeah, there you go.
19%.
Yeah, I saw
Best
that
sector.
Newmont is up more than 90% year to date.
Yeah, I mean, obviously, Newmont is the bellwether of the gold
Yeah.
mining industry and silver. They're into both.
Yeah.
Um, so, people, I think there's been this sort of shift towards the other sectors than technology. Money's coming out of it. And I think that it's very likely that the mining sector will do well because given the fact that the gold mining sector's done well, the silver mining sector's done well so far this year, better than NASDAQ, as we approach the end of the year, portfolio managers will be saying, what am I going to do if my client asks me, why don't you have any exposure to the best performing sector of the market? So they'll be buying into it. So they've got to allow time for it to go up before the end of the year. So at
Yeah.
least they've got some profit and say, oh, don't worry, I bought it.
Yeah. Clive, before we look at the Fed and central banks in general, I wanted to just thank the gentleman who sent me some stuff from Saskatoon in Saskatchewan, Canada. He sent me a key ring. That's the flag of Saskatchewan.
Okay.
And I'd also like to thank all the other people who sent me stuff, gifts through Gold Investments, like books and everything. And I like to say you don't have to send me anything. I'm just grateful that you guys watch the channel and participate with Clive and I. And yeah, make sure you also subscribe to Clive's channel. But I bring up Saskatchewan because there's a region in Saskatchewan called the Abitibi Basin. And that is supposedly, well, not supposedly, it is the Saudi Arabia of uranium. So, yeah, and uranium has done quite well, the uranium stocks. But
Yeah, I
anyway,
have no exposure to uranium, but it doesn't sound like a bad idea with
yeah,
the demand for energy rising, and they're going to
yeah,
have to build and use
yeah.
more uranium, I guess. But
Yeah.
where would you store it, Mario? In your pocket?
Well, I think there is a company called Uroy, Uroy. You can buy the stock, and they have a stock of uranium, so you can indirectly uh, own uranium through Uroy.
I'm just wondering what would happen if you carried
Oh yeah, in
a
your
pocket
pocket.
full of 1 ounce uranium coins in your
Yeah,
pocket. Would that be dangerous?
yeah, probably. I'm not sure. I'm not like a physicist, but
Maybe someone could write in the chat what would happen
yeah,
to your, what's.
would the Geiger counter would go crazy? But anyway, central banking independence, Clive, that has been like the bedrock of the our system for the last 30 years. Not that it's ironic, isn't it, that the central banks have been independent and we've had all these the biggest crises we've ever had since the 1920s. So you kind of wonder, even though I'm a proponent of no central bank, we kind of wonder if it's really that important, central bank independence. And we're seeing Trump go after the Fed. I even heard that he's going after the regional banks at the Fed. And these regional banks, they're actually private banks, Clive, the New York Fed and all of those. And I also saw that here in the UK, Liz Truss, who was prime minister for less than 2 months, she's talking about central banks. She says former UK Premier Liz Truss warns of central bank reckoning ahead. She seems to agree with Trump that they got too much power. And we also seen this is more to do with policy. We've seen this governor Waller saying that if we have weak numbers next Friday for the jobs number, that we could see a jumbo rate cut on the 17th of September. So this is one of the guys who voted for a cut in the last meeting, and I think he was appointed by Trump, and he probably wants to get the top job as well. So
And I think
maybe,
Michelle
yeah,
Bowman, I think, is speaking today, if I'm not
yeah,
mistaken, and she was another dissenter.
yeah.
So if she wants the top job, she's going to have to say the right words to please Mr. Trump.
Yeah, and Clive, prior to 1997 here in the UK, it was the Chancellor was involved in the decision to raise or cut rates, and I think in the US, not as much. But what do you think of? Does it make any difference to because we've had massive inflation, the money supply, and currency debasement. People, the bottom, I would say, 90% of people are not benefiting really from this asset price inflation. So, what's your view on this attack on the Fed's independence?
Well, central banks are supposed to be independent, and at least even if they still print money and buy the government debt, i.e., creating more and more money on the planet, they at least go through the pretense of being independent and go through the pretense of having sound money. But what happens when there's too much government interference in that? We have the answer from Turkey. So in Turkey, the central bank governors were fired in quick succession, one after the other, because they wouldn't play ball with Erdogan. And what happened? He put in place more and more soft governors who allowed the inflation rate to go through the roof. So officially in Turkey, we had an inflation rate of 40%, but the independent watchdogs said the inflation rate had moved to above 100%. So we obviously know the inflation rate was very, very high the minute they started to interfere in the central bank. Now, if President Trump and the administration does take control of the Federal Reserve, then all pretense of having a sound monetary policy will be gone. And I think the net result will be the Federal Reserve will be ordered to help fund the government by buying into the longer dated government bonds so that the government can issue 10, 20, 30-year bonds at very low rates of interest. But where will the Federal Reserve have to get its money from? It'll have to print it, so it'll be flooding the market with new money. And that will, of course, be a continuation of the asset price melt up we're seeing at the moment. And of course, what it'll do for gold, God knows, it will
Yeah, I
double,
was going to
triple,
ask you
quadruple the
that,
price of
Clive.
gold.
I was going to
Yeah,
ask you
it'll
that.
get a gold. The day
Have
they
you got?
pivot like
I
that.
was gonna joke. Have you got any gold and silver? Because I think there's gonna be outperformance of gold and silver hard assets. And talking about hard assets, Clive, there's something else that's going up a lot. And I don't know if you like a nice juicy steak, but live cattle futures. This is from the late 70s. They're breaking out live cattle futures, so it's going to become more and more expensive also to eat a nice steak.
Well, everything which is in limited supply, you can only have so many cattle because there's only so much land. Yeah, the prices are going up because it costs more to feed them. The fertilizer costs more.
Yeah.
The land costs more, and
Apparently,
so on.
Clive, the other thing that's impacted live cattle prices in the US is the tariffs on Brazil because Brazil is a big exporter of cattle. It's not the only reason, but it's one of the things that's really pushed it. So tariffs aren't because I saw a post on X by the Trump administration or by Trump or the White House, and they said the that petrol prices or gas prices, as they call it in the U.S., they're the lowest in the pump. For the Labor Day holiday since the first Trump administration, but unfortunately, steaks and beef in general is not is not gone down. So it seems to me that they're focusing a lot on all the positives, even though you should. But we had this GDP number, and they made a big deal about it. And someone I saw on X said, I'm sure that person who published this GDP number didn't want to lose his job or her job.
We're talking about the increase in the GDP number to
Yeah.
3.3% from 3. Well, yeah, and obviously, if you make the things sound better, you'll keep your job.
Yeah.
We all know the fire the messenger story now.
Yeah.
It seems that you want to deliver
Yeah.
to the administration the news that they want to hear and not the news they don't want to hear.
Clive, you spoke about Turkey and the government there telling what the central bank what to do and how that triggered a lot of inflation. I heard from the Gnome of Zurich because we talk regularly, and he said that in Italy there was a law that said that if the Treasury issued bonds, they may, let's say, at an auction, and there wasn't enough demand, the central bank was forced to step in and buy the rest. So, and look what happened. Italy has always been, up until joined the euro, the lira was a basket case of a currency that had high inflation. So, do you think not just the US could be moving into some kind of like agreement like that with central banks here in the UK as well? I could see that happening if the current government gets into trouble.
Well, I mean, a few years ago, Italy tried to issue a new currency through the back door against the rules of the European Union. So obviously, we had Italy is supposed to use the euro, but they tried to issue what was effectively going to be a new currency, and I forget what it was called, but basically they were called tax credit receipts or something like that,
Oh
and they were
yeah,
going to pay
yeah,
their government workers with these tax credit receipts, which could be used by anybody anywhere to pay your Italian taxes. And they were doing that because under EU law, they were not allowed to borrow any more than they'd already borrowed. They already borrowed too much. They'd exceeded all the rules and they
yeah,
were getting in trouble with the EU. So they thought, okay, we can't borrow anymore. We'll just start paying our workers with this new currency and we won't call it borrowing at all because it's just a way of giving them something which they can then sell to somebody else, which somebody else can then use to pay their taxes. Of course, the European Central Bank stamped down on that and stopped them doing it. But we'll see which way that.
yeah.
I think that might come back. We might well find that we have alternative currencies popping up, potentially with or without the sanction of the central banks.
And here, Clive, to end, I'm gonna come back like to the beginning of this video and say that countries in the global south or BRICS, they're seeing this. They're not silly. They know what we're doing in the West. And I'm not having a go at the West. Well, I am having a go at the West, and I'm not defending BRICS. I'm just trying to tell you what's happening. But they're going to see this, and what are they going to do? Well, they're not going to be buying these bonds and using it as reserves. I wouldn't because I know it's not going to have much value going forward. So it's another reason why they're going to continue to also stockpile gold, in my opinion.
Yeah, I mean, I think everything is pointing in the right direction for gold. I can't see that it's going to go down very much. I mean, obviously, it's not going to be a straight line up, and it always has its bad months and its good months. But the direction of travel is there's going to be a lot more government debt on the planet. There's going to be a lot more money through money supply on the planet, and there's going to be a lot more people who are nervous about holding their existing fiat-denominated instruments like cash, money market funds,
Yeah.
and things like that. And they're going to look for an alternative. And the alternatives will include, it will be other things too, but it will definitely include gold.
Yeah, Clive, it's well, almost quarter past 9 London time. And before we wrap up, just want to see where the markets are. So gold is at 34.13, the spot price. So it's down to $3. I saw yesterday, Clive, late in the day when the markets closed, gold traded up to above 34.20, so it's looking pretty good. Silver's come off a little bit. It's at 38.94, but still fairly firm. And the stock markets, the Dow futures down 100, Nasdaq 100 is down 88, and S&P is down 14. The pound is down a bit, it's down about zero point 0.2. And Clive, I see here that the 30-year yield is up almost 4 basis points. The US 30-year, it's at 491. And in the UK as well, we are at very critical levels. For example, the 30-year gilt is at 560. It's near like almost 30-year highs. And are you of the opinion as well that we could see trouble ahead in the short term in the bond markets?
Yeah, I mean, I think the problem seems to be in the UK market at the moment. They're having trouble funding themselves at the long end anyway. So we could have another Liz Truss moment where we have a sudden crisis in the bond market, prices spike downwards, and the Bank of England has to step in. You may remember last time the Bank of England stepped in and they got a guarantee from the government that they would see them all right, i.e., the taxpayer would pay.
Yeah, yeah. Well, and yeah, we've paid in the last 2, 3 years 80 billion to the Bank of England for the losses they've accrued on their portfolios of gilts. And actually, that was also an agreement that was yeah given by what's his name, George Osborne, who was the Chancellor of the Exchequer under the Cameron government. So, we're supposed to have a 50 billion hole now, Clive, for the next budget, but about 90 billion almost of that is paying the Bank of England for their losses. And you'd think, why does it matter that if the Bank of England loses money, it can just print money. Yeah, what's your opinion on that? It just seems a bit weird that a central bank that can just create money out of thin air being worried about losses.
I think that will be the direction of travel. As we see in the United States, that's basically what the Trump administration would like the central bank of the United States to do. I think it's coming to the rest of the world too.
Great, Clive. Any final words for the viewers?
If you have money earning nothing in Europe, which will be the case because interest rates are close to zero, you need to think about what you can do with it. And, I think that everybody needs to have a small number of silver or gold coins at their home. And if you can buy that 1 ounce silver coin, that will take care of the 200 million ounces that they expect to be sold this year. So go ahead and buy it and help those of us who've already bought some. Thank you very much.
Yeah, and I'll say that the general public, economists, Wall Street, City of London, they're still nowhere near awake to how important gold is going to be, or has been, and will be going forward. And with that, I'm going to wish you all a great weekend. Take care. Bye.
Thanks. Bye bye, Mario. Bye bye, everybody.